there. After a somewhat tumultuous week for both property owners and investors, and also for those who run businesses or investments through trusts, how are you doing? It's been a lot. Yes, that budget had a little bit of fun for just about everyone, didn't it? The consultation process is now underway. We're going to have to wait and see if Mr. Albanese and Mr. Chalmers manage to hold their line, or whether there's going to be enough influence and pressure from other voices to perhaps make some adjustments from those announcements. We're going to have to wait to see some draft legislation before we can make any solid changes to advice and structures. That is yet to come, so watch this space. In the meantime, there are still a few budget announcements I haven't brought to your attention, so that's what I want to wrap up today. Firstly, FBT exemptions for electric vehicles. If you're a bit late to the EV party, kind of like me, it isn't all over just yet. Yes, the benefit of holding an EV in your business structure is going to be scaled back. The full exemption will continue to apply until 31 March 2027. It will remain in place for a further 2 years for those vehicles that cost below $75,000. However, if your vehicle is above that amount, you will actually have a reduction of your benefit down to an FBT discount of 25%. So there's still a benefit of running it through your business, but it won't be as much as before. From 1 April 2029, the benefit for all EVs will be reduced to that 25% discount. So the party's not over for all EVs just yet, but it's certainly been dampened. Secondly, there is a new $250 tax offset for employees and sole traders in the 2028 financial year. This will effectively increase the tax-free threshold to around $25,000 when you take account of other tax offsets. While we're talking about low income earners, the tax rate for those with an income less than $45,000 will drop from 15% to 14% next year. For businesses, unfortunately, there's not a lot of great news. Anticipating structure changes and potentially getting hit with more tax when you go to sell your business, look, it's a lot to come back from. Here are 2 things the budget has for you. The instant asset write-off will be set in stone at $20,000. What does that mean? As in previous years, this will allow eligible small businesses to claim an immediate tax deduction for the cost of an asset when the price, excluding GST, is less than $20,000. Another measure for businesses is the loss carryback rules have been reintroduced. That means that if you've made a loss following a profit year, you can actually apply those losses back against that previous profit year and recoup the tax that was previously paid. Across this past week, with all of our emails and this video, we've pretty much covered off all the main budget announcements. If you have any questions about those or are concerned about how it may apply to your situation, please give us a call and we can make a time to chat through it.